Picture this. You've saved $10,000 in your bank account. You check it every month, and the number stays exactly the same. $10,000. You feel secure, responsible even. But here's the uncomfortable truth nobody talks about. That money is rotting. Not because of fees or taxes, but because of an invisible thief that's been picking your pocket in broad daylight. By the time you realize what's happened, you've lost thousands without spending a single cent. This is the silent tax of inflation, and it's costing you more than you think. Welcome to Forgotten Finance, where lost money lessons come back to life. Let's talk about something most people completely ignore until it's too late. Inflation. You've heard the word a million times. Economists mention it, the news reports it, but most people treat it like background noise, something that happens to the economy, but not to them personally. That's the mistake that costs thousands. Here's what inflation really means for your money. Every year, the things you buy get more expensive. Coffee, rent, groceries, healthcare. When prices go up, but your money stays the same, you can afford less. Your $10,000 might say $10,000 on your bank statement, but its purchasing power has shrunk. In practical terms, you're getting poorer while your account balance looks identical. Let's use real numbers. The average inflation rate over the past 2 decades has been around 3% per year. That might not sound like much. 3% feels tiny, almost negligible. But compound that over time and watch what happens. $10,000 today will only have the purchasing power of about $7,400 in 10 years. You've lost $2,600 of value without touching your money. In 20 years, that same $10,000 is worth only $5,500. You've lost nearly half your wealth by doing absolutely nothing. Now here's where it gets worse. Most savings accounts pay interest rates well below inflation. Right now, many traditional savings accounts offer less than 1% interest. So while inflation erodes your money at 3%, your bank is compensating you at less than 1%. You're losing ground every single year. The gap between what you earn and what inflation takes is real wealth disappearing from your life.
Think about what this means practically. Let's say you're saving for a down payment on a house. You need $50,000, and you're diligently putting money away in your savings account. But housing prices are rising faster than your savings because of inflation. You're running on a treadmill that's speeding up. The longer you wait, the further away your goal becomes, even though you're doing everything right. This isn't just about big purchases either. It's about your daily life. Your salary might get a 2% raise each year, and you feel like you're making progress. But if inflation is 3%, you actually took a pay cut. Your boss gave you more dollars, but those dollars buy less stuff. You're working just as hard, maybe harder, but you're falling behind. So what do you do about it? First, understand that cash loses value over time. Holding large amounts of money in low-interest accounts is a guaranteed loss against inflation. You need your money working harder than the rate of inflation. That means looking at investments that historically outpace inflation. Stock market index funds, real estate, even high-yield savings accounts or certificates of deposit that offer better rates. Second, think differently about debt. Inflation actually helps borrowers. If you have a fixed-rate mortgage at 4% and inflation is 3%, the real cost of your debt is shrinking. The dollars you're paying back in the future are worth less than the dollars you borrowed. This is why the wealthy use debt strategically while everyone else fears it. Third, invest in yourself. Education, skills, and experiences that increase your earning power are inflation-proof investments. If you can boost your income faster than inflation rises, you're winning. A $10,000 course that doubles your salary in 3 years has beaten inflation spectacularly. Fourth, diversify. Don't keep all your wealth in cash. Spread it across assets that tend to hold or increase value during inflationary periods. Stocks, real estate, commodities, even inflation-protected securities. The goal isn't to get rich quick. It's to preserve and slowly grow your purchasing power over decades. The biggest mistake people make is thinking that money in the bank is safe. It feels safe because the number doesn't change. But safety is an illusion when that money buys less every year. Real safety comes from understanding how inflation works and positioning your finances to stay ahead of it. Inflation is the forgotten finance lesson that everyone learns too late. The good news? Now you know. And knowing means you can act. Your future self, the one who didn't lose thousands to this invisible thief, will thank you. If this opened your eyes to money lessons you've been missing, subscribe to Forgotten Finance, where lost money lessons come back to life. Hit that notification bell so you never miss another lesson that could save you thousands.